Welcome back. Every successful company eventually hits this wall. They need serious cash to keep growing. But how do they actually get it? Turns out there are basically two roads they can take. And believe me, the choice they make is a total game changer. All right, so let's really get into this. Picture it. Your company is just exploding. I mean, the product's a hit, the team is amazing, but to really hit that next level, you need a ton of capital. This right here, this is that classic fork in the road. And the path you pick, well, it's going to define everything for years and years. So here's how we're going to break it all down. First, we'll talk about that need for cash. Then we'll look at the two big options, the famous IPO and the much more exclusive private placement. We're going to put them head to head, and by the end, you'll know exactly what goes into making this huge decision. So let's start with the basics. When a private company is growing and needs to raise some serious money from outside investors, it really comes down to a fundamental choice. Do you step into the public spotlight with an IPO, or do you take a more exclusive private route? Okay, let's kick things off with the one everybody's heard about, right? The initial public offering, or IPO. You can think of this as the big public superhighway for raising just massive amounts of capital. So what is an IPO, really? Well, it's that huge moment when a private company offers its shares to the general public for the very first time. This is how they raise a ton of capital, by getting listed on a big stock exchange, like the NASDAQ or the New York Stock Exchange. And right away, you see the core trade-off. The upside? Your shares are available to absolutely everyone. That's a huge pool of potential money. But the flip side is that you are now heavily regulated by the Securities and Exchange Commission, the SEC, and that means strict, constant financial reporting. No more hiding your numbers. And let me tell you, the process is intense. First, a company has to hire a big underwriting firm. We're talking Goldman Sachs, Morgan Stanley, to figure out the share price and how many to offer. Then comes the really grueling part, going under the microscope with the SEC to make sure everything is totally legit. Only then do the shares finally launch on the stock market, where you and I can buy and sell them. Now, there are definitely some real risks here. For an investor, an IPO is basically a bet on a company that's never been publicly traded before. That's why you have to read the IPO prospectus, that super detailed document with all the company's financials. It's crucial. It is worth mentioning, though, that a law called the Jobs Act has kind of lessened the burden for smaller businesses, cutting down on some of those really expensive reporting rules right at the start. All right, let's shift gears. What if you want the money, but you don't want all that public scrutiny? Well, that brings us to our second path, the private placement. If the IPO is the public superhighway, think of this as the exclusive, members-only toll road. So, a private placement is still a sale of a company's securities, but here's the key. It's not to just anybody. It's a direct sale to a hand-picked, pre-approved group of what are called accredited investors. And we are talking about the big, sophisticated players here, like a giant university endowment or a top-tier venture capital firm. And the huge advantage here, the company gets to stay private. Because they're only selling to these accredited investors, they get to dodge a whole bunch of those intense SEC reporting rules that an IPO requires. Now, what's the catch? Well, it usually means you're going to raise a smaller amount of capital. The two big words to remember here are speed and privacy. The whole private placement process can be way faster than that long, drawn-out road to an IPO. It gets the company that cash it needs, that liquidity, without having to show its financial laundry to the whole world. But of course, it's not all easy. Actually finding the right accredited investors, that can be really tough. And for the investors themselves, their investment isn't as liquid. They can't just go and sell those shares on the stock market tomorrow. There is an interesting upside, though. Since you're dealing with pros, the company can get creative and sell more complex types of securities. Okay, so we've got the IPO and we've got the private placement. Now let's put them side by side. This is the head-to-head showdown, and this is where you'll really see the differences pop. And wow, the contrast is pretty stark, isn't it? IPO, investors are the general public. Private placement, it's an exclusive club. Regulation, high and slow for an IPO, low and quick for a placement. And the biggest one path makes you public, the other lets you stay private. Simple as that. This table really lays it all out, and you can see how that first line, the investors, drives everything else. As soon as you decide to sell to the general public, bam, you're hit with strict SEC oversight and a really long, complex process. But if you stick with just accredited investors, you get fewer rules, a quicker timeline, and you get to keep your books private. Okay, so all of this brings us to the big final question, right? How on earth does a company actually choose? Well, it really just boils down to one simple thing: priorities. Yeah, and this quote really just nails it. If a company's number one goal is to stay a private entity, to keep control and not have to deal with the public markets, they don't have to sacrifice that. They can still get the cash they need. It's a huge deal. So at the end of the day, there is no single best path. It's not a formula. It's a deeply strategic choice that depends entirely on a company's specific goals. It's all about finding that perfect balance between growth, privacy, and control. And that really leaves us with one final big question to chew on. When you strip everything else away, it's a fundamental trade-off. So what matters more to you? Chasing that massive world-changing scale that an IPO can bring, or maintaining total control and privacy by staying private? That's the question at the very heart of every great company's story.